Today's topic, review these 3 vital parts of your auto insurance. That's right, a topic we usually don't cover. You know why we usually don't cover it? Because this has been a topic that I've never been super comfortable with in terms of financial planning. But that has been changing as of late, as this has become a more integrated part of our review process, thanks to some cool technology, but also areas where we believe there is a lot of value in, and an area where most people don't want any hassles, right? They don't want to deal with it. And it's also somewhat of a pain in the butt because it changes from one state to the next, which makes it hard for us non-property and casualty insurance agents. Again, disclosure, I am not a licensed property and casualty insurance agent. Talk to yours, don't talk to me. Just like I'm not an attorney, just like I'm not your accountant. Use your people, but this should give you some good context. And I think my non-nerdiness potential on this topic helps you because we're going to keep it simple. I'm going to review things with you in this video that I review with our clients in areas where sometimes it's just the simplicity of knowing what the heck does that mean? Or should I increase this or lower this? Or what does this do or that do? Only 3. That's all we're going to cover. We're not going to get crazy with it. And I'm even going to give you a little bit of a teaser here. Here's the 3. We're going to do deductibles. We're going to do liability. We're going to do under and uninsured. So 3. Those are the 3 big ones. I'm going to walk through them in very simple terms because that's all I know as well. But we do this day in and day out with our clients. So I wanted to take this topic, which really triggered from a recent client question on, hey, move to a new state, updating our car insurance. What numbers should we be looking at? And I thought to myself, you know how many times this probably comes up, but no one sends it to us? So now we're going to just send it to you proactively. So that's all coming up right now. Before we get into it, again, just want to start plugging this in since we got rid of that intro video. I know, saves you some time. You're welcome. But also quick plug, if you have not subscribed, please subscribe to the channel. Click on the bell icon. You'll get notified every time we release new content like this one. Give us a thumbs up if you love it. Drop us a comment. There's also a link in the show notes if you want to drop us a personal note through the Google form there. That's it. That's all I've bombarded with. So first up on the list, deductibles. Now, as I noted at the start, this has been a topic that's always kind of given me a little bit of I always try to swerve around it sometimes. Not as of late, but you go back 5, 6, 7 years ago. It's a topic where we knew it was happening, but we didn't get too far into the weeds because there were so many moving parts from one state to the next. And we literally have clients in, I believe, almost half of the 50 states. I think we're at 26 states now. But regardless, it moves a lot. And I'm not a property and casualty insurance agent. We sometimes call these P&C agents. These are usually the individuals that are selling you your homeowner's insurance, your car insurance, your umbrella insurance. They're usually in that bundle. But this is one that we've always mentioned in terms of, all right, this is one of the easier ones to lower your premiums. It's not going to be a ton, but it can lower the premiums. Now, keep in mind, I know I note this on a lot of videos, we work with physicians and usually higher income professionals are watching these videos. So when I note this next number, it may not fit everybody. But one of the things that most of you should be doing is likely increasing your deductibles for both comprehensive and collision. For most of our clients, we say around $1,000, which for most insurance companies, that's actually the highest they'll go, is $1,000 deductible. Unfortunately, when we usually review a policy for the first time, it's much lower than that. Maybe it's $250, maybe it's $500. Now, if you're watching this video and your current deductible is $500, you increase it to $1,000, don't think your premium is going to get cut in half. We're talking somewhat minor moves here, and usually there's even a few years to break even, right? You increase it, your premium goes down by a little bit, you got to go a few years without an accident, or we're kind of working our way back to that break even again. But if you set this up, hopefully you don't have a lot of claims, you should be saving money in the long run. So the first one here with deductibles is think about raising those deductibles. Now, let's add some context here. Words that you probably don't know, words that I didn't know until I started to dig into it more, is comprehensive. So what does comprehensive mean? Comprehensive means it's pretty much not a car collision. So think in terms of this as theft or vandalism. So let me give you an example. You left the car unlocked, silly you. Someone got into the car, they stole some stuff, you want to get reimbursed for it. I don't want to say anyone on this video may have done this, but I can tell you that someone on this video may have had this happen to them in Philadelphia when he forgot to lock his car one night. In this example, if your deductible is $1,000, you got to at least pay the insurance company $1,000 before they reimburse you anything. So if they only stole, I was going to say a couple of cents out of the change jar, but we got to make it more crazy than that. Let's just say they stole about, $800 of equipment out of your car. Well, in that example, probably better to pay that one out of pocket because you're not even going to hit your deductible. Also be careful here. The amount of people that will then say, well, they stole about $1,200 worth of goods, so my deductible is $1,000, so I'll make $200. You're thinking, made $200. So what could happen there though is now you have a claim. As soon as you put a claim on your policy, guess what's going to happen next year at your renewal? Wait. Just wait. That's right. It's going to go up, and it's likely going up more than $200 per year. Keep that in mind. Be careful around the edges here. Now, if you're watching this video and you're thinking, well, how the heck do I know if I should raise my deductible that high? Well, if someone sent you $1,000 bill, how do you react? No one's excited for it. Don't want to downplay that. But can you say, hey, I could easily pay $1,000 because our cash reserve or emergency fund's good? Probably, again, most high-income households, hopefully that's the case. If you hear 1,000, you're like, oh my gosh, Chad, I don't have to put it on my credit card. Maybe that's an example where $1,000 deductible may not make sense. Keep that in mind. So we did comprehensive. What's collision? Collision is your more common insurance, right? You're thinking of you overturn your car, someone hits your car. Those are your more common examples of coverage, right? Most of it's based on collision, but comprehensive covers all that. So first section, deductibles. For most of you, you're likely raising this. For a lot of you, you're probably looking at $1,000 deductible. If they let you go higher than that, I'd kick the tires on it, kind of compare these options. But deductible is an important one. It's one that I like to start with because it's also where we started when we started to review these types of policies for our clients. Next up, liability coverage. I try to put kind of a short note on all of these. My goal here is for most of you, you should try to max it out. So what is liability coverage? This is you hurt someone with your vehicle in this example. So think of two different categories here. We got bodily injury, we got property damage. Those are your two most common forms of liability. Oddly enough, this is one topic that we don't yell at our clients for often because all of our clients have something called umbrella insurance, an umbrella policy. One of the beautiful parts of an umbrella policy is it pretty much forces you to max out all your other liabilities. So before they let you put a extra liability policy in place, which is what an umbrella policy is, it will make you increase the liability on your auto and also your home. So for a lot of our clients, this is the one that they will force higher regardless. But if you don't have an umbrella policy, one, I'd argue you should probably go get that. I know I noted that we work with physicians, high-income professionals. I could make a case that anyone needs it, right? I don't care what your profession is, a cop, a teacher, two nurses, a stay-at-home parent. I don't care. Everyone has a very big liability issue in today's world. We are a very sue-hippie world. You get into an accident with your car. Most people are thinking of how can I make a buck today, unfortunately. So just keep that in mind. But this is one where you're trying to cover yourself in terms of being sued by that individual, which is where we call it liability. This topic, I would say most of you should be looking to max it out. You should be forced to max it out if you have an umbrella policy. If you don't have an umbrella policy, likely add an umbrella policy. If for whatever reason you can't add an umbrella policy, which does happen to some individuals with maybe an iffy driving record. Also, another tricky one here. If you have kids that are within the ages of driving, right, 16 to 24 range, they may not allow you to add an umbrella policy because of the extra liability that comes with that. It has some moving parts to it. But for most of you, when you hear the term liability in terms of auto coverage, bodily injury, property damage, you are thinking in this world of maxing out or getting it as high as you can. All right, last one, the one that I fumbled at the very start here. Underinsured, uninsured motorist coverage. So for uninsured motorist bodily coverage. This coverage will help cover bodily injury caused to you if you are in an accident with someone who has little or no insurance on their own. And what does this include? Well, this is bodily, right? So bodily means pretty much anything in terms of damage to you. So this could be medical, this could be wages, it could be anything of that nature. The other topic on there is property. Property is usually to repair your car, right? To get your car back up to what it needs to be running again. This is one where, you kind of hear out there every now and then. This is one where if you have a beater car per se, this could be one where you maybe don't even have this coverage, right? You could end up dropping that coverage. This topic is always tough because it varies from state to state in terms of is it required? How much is required? To give you high level numbers, 5 to 25% of individuals are underinsured or uninsured. Let me give you some more stats here. Here are the highest uninsured. So these states have the highest people without any insurance. District of Columbia, good old Washington, D.C. Looks like those politicians are maybe a little bit crazy down there, right? New Mexico, Mississippi, Tennessee, Michigan. Top 5 uninsured. Underinsured. The A states lead this list here. So underinsured states, we got Alabama, Alaska, Arizona, Arkansas. That's why I said the A list, right? That's a lot of A states. Followed by a big C list, California. So those are your most common underinsured states. Now there's more than that, right? Actually, I wonder, no, we will. We'll put a link to that, put in my notes here. We'll put a link to that. So if you're thinking, where does my state fall? We'll put a link to that report so that you can actually see where your state falls. Now, depending on where your state falls, I wouldn't say that should dictate how much you should get, but it might give you a little bit oh, I should probably increase that amount. And then I also just wanted to share some context because this is another one that kind of always caught me off guard in terms of how they list it. But you'll often see something like 10/20/10. And you're probably thinking, well, what does that actually mean? So what I wanted to do is just give you a little context here. So the first one is bodily per person. Next one is bodily per accident. followed by the final one is property. Let me give you context. The state of Florida will give you a 10-20-10. What does that mean, Chad? Well, it means 10,000 per person bodily, total per accident up to 20,000. The last 10 on there, property. So you got your 10-20-10. To compare it, I just used Pennsylvania, the state that we lived in for all of our lives before we got to Florida. 15, 30, and 5. So just to kind of add some context, again, that is your bodily per person, bodily per accident, and then property damage is the third one there. If you focus on those three topics in your auto insurance, you should be in a good spot. And again, have a conversation with your property and casualty agent. They're going to have much better stats on your states too, on what they see. With any of those topics, also do your own research. If they seem to be pushing you higher on a number or lower on a number, see what that actually means. But if you focus on deductibles, liabilities, in that under versus underinsured topic, number 3, you should be in a really good spot there. But again, a topic I don't think gets enough attention. This is one of those ones where you get auto insurance, you get homeowners insurance, you don't look at it, right? You don't touch anything. You just think, oh, it must be good. And you let it roll out for 10, 20 years, where you should be checking this. You should shop it around every few years, see if there's anything out there that's better. But focus on those 3 parts. You should be in a good spot here. As always, thanks for hanging out with me for the last 15 minutes or so. If you have not subscribed to the channel, please do so. Click on that bell icon. We'll send you a notification every time our newest video is released. Drop us a comment, give us a thumbs up. Let us know what you want to see next. What are we missing? What can we help you with? Send that our way. But again, thanks for hanging out with me, and I will catch you on the next video.